I mentioned that Bitcoin is very much a part of this administration's plans, including building a strategic reserve. We're very excited about that. We think that this is the layer of the internet that the developers in the early 90s did not build in. And we were at risk because of the SEC of losing this next big wave of the internet, all around commerce, financial services, digital property rights. And now we think this administration is going to bring that innovation back home where it started, and we're going to ride that wave again. So we're pretty excited about what has just happened from an innovation point of view.
Cathie Wood begins by examining how a Federal Reserve shift would affect economic expansion. Wood says that if interest rates fall, a move toward more accommodating monetary policies may pave the way for a productivity boom. A more benevolent financial climate, she stresses, could encourage innovation in fields like artificial intelligence, robotics, and genomics by speeding up capital investment in disruptive technologies. What about the dangers of inflation, though? Wood points out that although lower rates may fuel inflationary pressures at first, technological advancements may offset them with deflationary effects. This deflation, brought on by innovation, may contribute to long-term price stability while offering a rare chance for exponential development in industries that are undergoing significant change. Before we dive deeper into Cathie Wood's insights, don't forget to explore our other videos on finance, cryptocurrencies, and the future of disruptive technology. We'd love to hear your thoughts in the comments section below. Thank you, and let's get started.
I think President Trump is very pro-growth, and he's not going to do anything to impede growth in that way. He wants the dollar down. He thinks that will make us more competitive. What I think will happen is the returns on invested capital in the United States relative to those elsewhere in the world, they're going to increase, and that is going to attract more capital, which will actually boost the dollar. Now, in terms of interest rates, the dollar going up is anti-inflationary, as is the productivity growth associated with a burst in activity caused by lower tax rates and other incentives for investing. So if inflation is going to surprise on the low side of expectations, that's going to be very good for innovation-driven strategies. What happened during the last 4 years, actually, is the burst of inflation caused by many things, but COVID, supply chain, money growth exploding. Even though the Fed has gotten all of that under control, I think a lot of investors have had trouble believing that it would stay under control. The way inflation will stay under control is productivity growth, and we're already seeing strong productivity growth thanks to artificial intelligence and other new technologies, as well as actually the dollar firming. Most commodity prices are priced in dollars. Most commodities are priced in dollars, I should say. And the dollar going up means downward pressure on commodity prices. That's a very good thing as well. So what will happen to interest rates here? Now, this is a little different from the 80s. Interest rates were so high at the beginning of the 80s, 15%, that really, if the Reagan administration got anything right, those interest rates would come down. And they certainly have. Now, 45 years later, they are high relative to recent history, 5% on the Fed funds rate. And they are restrictive relative to where we see inflation going. So we do believe there will be a downward pressure on interest rates, maybe even more than many investors expect in the near term, because I think a lot of activity is going to be held back by, a desire to understand how policies are going to change in the future. If we believe tax rates are going to come down, we're probably going to wait. If we're businesses and consumers, this is classic. It even happened during the Reagan administration when he phased in tax cuts over 3 years. Most people just waited until the tax rates were at the point he had promised. So we probably will see some holding back of activity in the next year in anticipation of even lower tax rates. So I think interest rates will be biased to the downside. Thereafter, I think we're going to see an explosion in productivity growth. That's what the convergence among the major innovation platforms around which we've centered our research. So robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the healthcare space. Those platforms are converging and we believe are going to unlock explosive productivity growth, explosive GDP growth, and much lower than expected inflation because all of these platforms are deflationary. They're technologically enabled, and that's good deflation. As prices fall, units explode, and it's really important. The reason we give our research away, it's important for investors and individuals and businesses to get on the right side of change because these are transformative technologies. So in terms of government policies, perhaps the most profound thing that's going to happen in the very near term is a changing of the guard at some of the regulatory agencies, the SEC and the FTC. The SEC menace to the digital assets movement. We've lost a lot of talent to other countries because of Chairman Gensler. And I think that's going to change. We know it's going to change. President Trump has come out very positively predisposed to certainly Bitcoin, but we think everything crypto, DeFi or decentralized financial services. And so that's going to be very exciting.
Wood argues that digital assets are an essential part of the internet that was largely overlooked in its early stages. By supporting the growth of this sector, she believes the U.S. has the opportunity to build a powerful digital economy, complete with financial services, secure digital property rights, and decentralized finance, all aimed at bringing innovation back to American soil. She also stresses the need for deregulation to encourage innovation. According to Wood, the combination of advancements in artificial intelligence, blockchain, energy storage, and healthcare technology could lead to one of the most significant productivity surges in history. However, to unlock this potential, government policies must be supportive rather than restrictive. Wood highlights that ARK Invest's research on these transformative technologies is freely available. This openness is intentional, aiming to help investors, businesses, and individuals grasp the revolutionary impact of these innovations and better position themselves for what's ahead. But that's not all. She will also talk about Bitcoin. So let's get back to the interview.
The regulations are also going to change because we're probably going to see Lina Khan at the FTC leave her position. And of course, the strong-armed antitrust regulations that Lina Khan has abided by, those are going to go away. They've prevented mergers and acquisitions that we absolutely need. Large companies are looking at these smaller companies innovating and perhaps being very disruptive to their models, and they'll probably want to get some of that DNA into their companies. I think the regulatory cutbacks are going to be profound. In his first administration, President Trump said to regulators, you want to put in a new regulation? You have to take away 2. I think that he'll be even stronger on that. And of course, when it comes to government spending, he's inviting Elon Musk into or under the tent. Now, the deficit will go down, we think, because of growth, but also we think the inefficiencies in the government are extreme. And we do believe that Elon Musk, first principles-based white sheet of paper, will figure out ways through attrition in terms of headcount and technology, productivity gains, to really shrink the government as a percent of GDP, getting a lot of the waste out of the government. And of course, every president has promised that. I think this one will deliver with the help of Elon Musk. We do not believe that Elon's going to be leaving his companies. We do believe he'll put in place a process that will be reinforced by some of the people who will be attracted to this goal and want to be a part of helping him carry it out. So there we go. That's the macros. In terms of innovation, we think it's been brewing really for since the last 25 years. The seeds for everything we're seeing today were planted in the years when active management was in full stride. The 20 years that ended in the late 90s, the internet revolution. And since then, we think that government policies have impeded a lot of innovation, but behind the scenes, the seeds have been flourishing, and now we think the blossoms are out. Innovation is going to thrive now in this new environment, and we think the three biggest opportunities right now associated with the convergence of these technologies are in the autonomous mobility space. So everything, robotaxi, drones, and so forth, healthcare, and digital assets. I mentioned that Bitcoin is very much a part of this administration's plans, including building a strategic reserve. We're very excited about that. We think that this is the layer of the internet that the developers in the early 90s did not build in. And we were at risk because of the SEC of losing this next big wave of the internet, all around commerce, financial services, digital property rights. And now we think this administration is going to bring that innovation back home where it started, and we're going to ride that wave again. So we're pretty excited about what has just happened from an innovation point of view.
Wood draws attention to the impact of regulatory rollbacks, particularly if a Trump administration returns. Trump's previous approach required that for every new regulation, 2 were removed, a strategy that Wood anticipates could intensify, fostering an environment more conducive to innovation. She further notes the possibility of Elon Musk's influence in rethinking government spending, predicting that Musk's efficiency-focused approach could help streamline government operations, reduce waste, and make the government leaner relative to GDP. Wood believes that the combination of digital assets, healthcare, and autonomous mobility offers enormous development potential in terms of innovation. Comparing the present administration's support for Bitcoin and digital assets to a lost early 1990s internet layer, she argues that it is a calculated move that might facilitate a flourishing digital economy focused on commerce, digital property rights, and finance. Wood finishes by stating that these technologies are prepared for a significant advancement following 25 years of foundational effort. She anticipates a thriving moment for invention, possibly one of the most important growth periods in history, with deregulatory policies in place. Thank you for watching. If you're excited about this era of innovation, be sure to like, subscribe, and join the conversation in the comments. Your engagement helps us grow and continue bringing you insights on disruptive trends shaping the future.